Hi everyone, this is a technical analysis on gold. Let's start with a fundamental overview first. The FMC decision on Wednesday didn't provide anything new. In fact, the Fed delivered on expectations with no surprises whatsoever. The central bank kept rates steady, reduced the Q2 pace, revised growth lower and inflation higher, and kept the dot plot mostly unchanged. Fed Chair Powell acknowledged the current uncertainty around Trump's policies and the inflation outlook, but confirmed that the economy remains healthy and the Fed is in a good position to wait for more clarity. In the bigger picture, as long as the Fed doesn't change its reaction function and doesn't mention rate hikes, the trend should remain to the upside as real yields will continue to fall unless we get another strong growth scare. Therefore, all the technical pullbacks continue to be just deep buying opportunities. The next key event is scheduled for Monday when we get the US flash PMIs, which, coupled with the University of Michigan consumer sentiment inflation expectations, triggered the growth scare last month. Now, on the daily chart, we can see that gold got into some consolidation around the 3050 level, as we haven't got anything new in terms of fundamentals. From a risk management perspective, the buyers will have a better risk reward setup around the 2955 level, where they will also find the trend line for confluence. The sellers, on the other hand, will want to see the price breaking below the trend line to start targeting the 2832 level next. On the 4-hour chart, we can see that we have a minor support around the 3020 level, which is also the neckline of the head and shoulders formation. This is where we can expect the buyers to step in with a defined risk below the neckline to position for a rally into new highs. The sellers, on the other hand, will look for a break lower to gain more conviction and pile in for a drop into the 2955 level next. On the 1 hour chart, we can see that we have this counter trend line that is defining the current pullback and can turn into a bullish pennant if the price were to break to the upside. In such a case, the buyers will likely increase the bullish bets to position for a rally into new highs, while the sellers will likely lean on the trend line to position for the break below the neckline and target the 2955 level next. These red lines define the average daily range for today.